Why should I invest? My father is one of the hardest working people I know. Growing up, I saw him working tirelessly in a factory making cable ties. But that wasn't his only job. He also had a side hustle cutting grass just so he could provide for me, my mom, and my 3 sisters. He was determined to give us a better life, and every extra dollar he made was carefully stashed away in a shoebox or placed in a bank account that paid little to no interest. His dream? To one day quit his factory job and finally enjoy the fruits of his labor. When my uncle decided to invest some of his money in the stock market, my dad was skeptical. He saw investing as extremely risky. To him, the safest approach was to save money in a bank account and avoid any potential losses. But what he didn't realize was that he was also playing a risky game. Every year, my father's hard-earned money was losing value due to inflation. Over time, the cost of goods and services increased while the purchasing power of his savings declined. As more money was printed and circulated, the money he had saved in his shoebox and low-interest bank account became less valuable. The harsh reality. He was never able to quit his factory job. Watching this unfold scared me. I didn't want my future to be dictated by inflation eroding my savings. So I made a decision early on. I was going to invest. And because of that decision, not only have I been able to beat inflation, but my investments now generate around $17,000 a week in passive income. Over the course of my life, this strategy has made me millions. I'm not a financial advisor, but I am someone who has been through the journey and seen the results firsthand. That's why I'm making this video, to share exactly what I wish I had known when I was younger. How can I make money investing in stocks? The first step to making money in the stock market is understanding how to beat inflation. Over the last 60 years, inflation has averaged around 3.8% per year. This means if your money isn't growing by at least that amount annually, you are actually getting poorer. In an ideal world, you'd have a savings account that offers a return of 8–10% per year, allowing you to both outpace inflation and grow your wealth. But such savings accounts simply don't exist. The closest alternative: the stock market. When you invest in stocks, you are essentially buying small portions of companies. As a shareholder, you can make money in 2 primary ways. Stock price appreciation. If the value of the stock increases while you own it, you can sell it at a higher price than what you paid. Dividends. Some companies distribute a portion of their profits to shareholders in the form of dividends. This means you can earn money without selling your shares. The real magic happens when you own multiple stocks that grow at an average of 10% per year. Thanks to compound interest, the value of your investment snowballs over time. To illustrate this, let's take a look at an example. If you invest just $250 per month into the stock market with an average return of 8% per year, in 42 years, you'd be a millionaire. If you continued investing for another 10 years, your account balance would exceed $2 million. Of course, if you invest larger amounts, you'll reach these milestones even faster. While past performance doesn't guarantee future results, this strategy has worked for many investors, myself included. When should I start investing? The short answer, as soon as possible. The earlier you start, the better. Time is your best friend when it comes to investing because it allows compound interest to work its magic. The longer your money is invested, the more it has a chance to grow. And when you're young, you can afford to take more risks, giving your portfolio time to recover from inevitable market downturns. Stock market crashes happen. They always have and always will. But with a long-term perspective, history has shown that markets bounce back. However, before you start investing, you should take care of two important financial priorities. Pay off high-interest debt. There's no point trying to make 10% returns in the stock market if you're paying 15% or more in credit card interest. Build an emergency fund. Set aside enough to cover 3-6 months of living expenses so you don't have to sell your investments in an emergency. Once these are in place, you're ready to begin your investing journey. If you're under 18, consider asking a parent to open a custodial account for you. This simple step can give you an incredible head start. How much should I invest? The typical answer you'll hear from seasoned investors is, as much as possible. But I take a slightly different approach. I built most of my wealth by starting businesses and used the stock market primarily to grow my money over time. I've also lived a fulfilling life, flying planes, racing cars, traveling the world, and even competing for my country. If I had invested every penny into the stock market, I would have missed out on these experiences. So, how much should you invest? It depends on your personal goals and comfort level. However, a good rule of thumb is the 70-20-10 principle. 70% for living expenses, 20% for investments, 10% for fun and experiences. Research shows that people who consistently invest 20% of their income are better prepared for life's ups and downs and are more likely to achieve financial independence. How do I buy stocks? Thanks to modern investing apps, buying stocks is easier than ever. You can start investing with as little as $1 thanks to fractional shares, which allow you to buy a portion of a stock rather than a whole share. If you're in the U.S., opening a Roth IRA can help you invest tax-free. In the UK, a stocks and shares ISA serves a similar purpose, while Canadians can take advantage of a TFSA and Australians can use superannuation accounts. These accounts allow your money to grow without being taxed, but they come with contribution limits. One of my favorite investing platforms is Trading 212. They offer commission-free trading and even let you practice investing with fake money before putting your real money on the line. What's the best investment strategy? For most people, the best way to invest is through index funds. These funds allow you to invest in hundreds or even thousands of companies at once, reducing risk and ensuring steady long-term growth. S&P 500 index funds track the top 500 companies in the U.S. and have historically returned around 10% per year. Total stock market index funds give you exposure to the entire U.S. market, increasing diversification. Emerging market funds invest in fast-growing economies like China and India, adding a layer of international diversification. By investing consistently in these types of funds, You can build significant wealth over time with minimal effort. Final thoughts. Investing isn't about getting rich overnight. It's about building long-term wealth. The best time to start was yesterday. The second best time is today. If you want to learn more about stock picking, watch my other videos and don't forget to subscribe.